Struggling with prop firms? Let's go. Okay, today we're going to be speaking about, what true edge is. And if you've already seen the title of the video, right, I'm going to be speaking about obviously how I was able to pass phase 2 in one day. And the core message of this channel is simplify trading, finding your real true edge. Psychology is great, having good risk management is great, having a good strategies, all these things are super important. But the number one thing is if you have an edge over the market, that's what's really good. And the best way to look at it, right, this is how I've just reprogrammed my mind now. Let me just show you, by the way. I'm gonna go break this whole everything down. So this was phase 2, and there's only a little small 10k account. If you've been watching my content for a while, you will know why I do these small 10k accounts. I've shown 50k, passing 50k accounts, 200k accounts. I made more than 400 videos on my channel. You can always go back and check those videos. 100k, passing 100k accounts. But then I started getting messages, for the little guys, they can't afford a 200k account or a 100k account. So I thought, let me start showing how you can pass these small little, 10k accounts. By the way, straight off the bat, not the best equity curve. I'm going to be going into this. Took around 18 trades. I'm going to be going through everything here. So, and when I be showing passing challenges, risking 0.5% and passing them in one trade in like phase 1s, phase 2s, in like catching 1 to 15 RR trades, 1 to 12, 1 to 10 RR trades. If you watch my other videos on my YouTube channel, 1 to 22 RR trades, turning £10 into 220. Crazy moves. So the reason why I thought I'll go with the most simple approach, the most what everyone's familiar with, targeting 1 to 3 RRs. Right now, this hit my psychology differently. I wasn't expecting this. I thought I'll try something different, right? So another thing as well, quick shout out to one of my students. She's got a first ever payout, huge. She just posted this today. Huge, probably she's hidden the amount. Obviously everyone's private with how much they when it comes to money. Even I am myself, I totally understand and respect that. But huge props to her once again. And if you are looking for, she's by the way one of my one-to-one mentorship students. If you are looking for a one-to-one mentor, how to pass these problem challenges comfortably, where it actually just becomes like a game of game, link will be in the video description. Also I just want to show as well, the most affordable course on the internet. Look at just 99, just 2 digits, that's it. But yeah, link will be in the video description. Now if you wanna from that point, so before I go into, let's quickly go through some of these trades. Right now, when I was targeting these 1 to 3 that you can see here, you're gonna see a lot of trades over here. I'm just chopping them early, super early. Right now my win rate, it says it's around 33% last time I checked on this. 33%. Obviously it's a lot higher because a lot of these trades here now, if you my early first started from the bottom here, I hit this 1 to 3 straight away. Now ideally I'm targeting like a 1 to 3, 1 to 4, just trying to experiment with something different, smaller risk rewards should I say. And I'm bringing all these other forex pairs into like AUD, USD, Euro, JPY, which I normally don't trade. GU, UJ, Nasdaq, Euro, USD I'm very familiar with. So I'm experimenting with different things. So what I started doing was, when I was entering these positions, I was just cutting them early, right? Whether you want to call it, psychology wasn't on point. Again, just targeting these small, because I'm risk reward. So I'm always been an individual. And obviously, I'm supposed to trade a strategy that suits your personality, right? This when I was trying the small risk rewards, I didn't imagine beforehand how much an effect it would have on my psychology. And now, again, what I mentioned earlier, it's all about having an edge over the market, right? The best way you can do that is think of the market as an individual, like a person. Think of the market as a person. There's a battle, consistent battle going on between you and the market. And what is that battle? That you are going to try and pull out the money out of this person's pockets. The market, is going to try and take the money out of your pockets, right? It's a consistent battle. Now, and it comes down to, so it's all about, do you have an edge over this person, or does this person have an edge over you? Right, so a 1 to 3 in my eyes is a decent edge, right? I remember watching a veteran like trader. He's got 40 years of experience on this podcast, and he was like saying, if you can catch a 1 to 4, you're a world-class level trader. So with this particular method, just going for a 1 to 3. I am going to be obviously going over, going over these entries, how you draw zones and all that. But just quickly wanted to go over this as well, right? Phase 2, this was passed in one day. Some trades were taken, it was passed quite quickly. As you can see, started around 10:40 ish. Now this is a different times. I know this. I don't know how many hours this might be forward, but I believe it was done within about 2-3 hours. It was done within about 2-3 hours passing phase 2. And if you even remove some of these trades, like these 12s, 25s, 8s, 23s, like, it brings my win rate ideally up to 50, 60%. Eventually at the end, I thought, right, okay, I'm confident with these two positions, held them, and they just passed the phase. Now I want to speak something about how prop firms also. Now again, the markets themselves are an individual. You got to think of them like this, right? That they're trying to have an edge over you. The prop firms, you can just look at them as, they are also another person that are trying to have an edge over you as well. So you're working against two people here, not one. Always remember this. So that's why the bigger and the better the edge that you have, the better the advantage you're going to have over the individual. So let's go into, if I just show you. So what do I mean by that? I'll just give you, first example, right? With prop firms, if you think about it, with prop firms, they charge you, it's a demo account, right? But they charge you 20% if you get your payout. Why did you charge you 20%? Why do they charge you 20% commission if it's a demo account? So they're just doing everything that they possibly can to reduce your, payout. Number two, they can send you the payout within a day or two if they really want to. Why did they make you wait 2 weeks or 1 month, like example, other prop firms? I'm not knocking any prop firm down. I'm just saying it's an edge. It gives them an edge over you because it'll give you the temptation to be like, I don't want to wait 2 weeks. I don't want to wait 1 month. Let me go and trade and make more money. In that process, you might start losing more, or even start knocking down your profits, which gives an edge. Give the prop firm an edge over you, the markets an edge over you. Ideally, the more you trade does not mean the more you'll earn, right? You only earn more if you apply your edge. If you don't have an edge, you're pretty much doomed. Now, another, what prop firms do as well. For example, look at this. You need to have 1 to 3 profitable days. It used to be minimum trading days of 3 or 4 trading days. Now it's profitable days. I won't be surprised if other prop firms start applying this as well. What does this mean? I even messaged them, right? Because what I did was, I didn't know this. So what I did was, with this specific account, I just made one day, I made a profit of $1, right? I just went for a 1-to-1. I thought I'll risk the $1 to make a $1, right? And obviously I did that. It still said profitable day 1, or well, it was, and I was like, why is it not changed? So I hit them up. They said you have to make a minimum of 0.5% profit. So ideally on this account is $50. Now 1%, if it was a 1%, right, or half, I think 1% is getting a bit out of hand. But I mean, if you have an edge, there's nothing to worry about. But again, the prop firms feed off the basis of traders who don't have an edge. Knowing how to trade and having an actual edge, right, is a big, it's a totally different ball game, right? Also, even if you have a edge, does not mean you will get a payout. This is what a lot of, this is how prop firms make the most amount of their money. This is what I believe, because what I mean by that is, imagine you, how can I say this? You have an edge, but still a weak edge. You could still fail a prop firm account. So not only will they be able to pull out money from traders who don't know how to trade, but even traders who have a slight weak edge. This is why it's only important if you go to a prop firm once you have a very, very strong edge, right? Then if you have a super strong edge, that's just like you're just taking on 2 small guys and you're the big guy, right? And you're the more muscular, more heavier, bigger frame. That's basically, the better the edge. If you have a slight edge, small edge, you're still the scrawny, slim guy trying to take on 2 medium size. It's not going to work out. When you might be able to take one out, but the other one will eventually take you out. So it's like really it comes down to what is your edge. Now for example, let's go into let's minimize this a little so you can just focus on the charts. So what I want you to do now is practice how you draw these zones. So how do you draw zones? Obviously today is Good Friday in the UK. It might be even all over the world. So basically, as you can see, the markets are just been really choppy. And now how do you know this, right? The wicks are way bigger, and per candle are way bigger than the candle body. And you can see what does that mean? Less volume in the markets. As you can see, look at this, all this nice juicy volume here. If I just turn on the session indicator, first of all, this is the blue. Look at this, Asia session, London session, New York session. Look at that. Look at these candles throughout the whole day. Tiny compared to all this. Let me remove the session indicator so there's no confusion. So let's just go into now how you draw these zones, right? You want to look for major rejections points, right? Or major points where price, to simplify it, does U-turns. As soon as a bearish candle plants, a bullish candle forms, practically that is your zone. You want to do this on a bigger time frame. Ideally, the bigger the time frame, the better the zone. Let's see if we can draw some. So basically this, and also you want to focus on the more recent zone. The more fresh the zone, the more stronger the zone. So basically, that's how we came to this point. Once you've got your zones drawn, then you can just go on a different time frame and then start focusing on your ideally smaller time frame to focus on your entries. I'm going to keep these on 1 to 3. That's what I was aiming for, like typical 1 to 3s, keeping it super simple. If I go to so for example here, and you want to focus on price action as well. What price is showing you? You got like double bottoms here, triple bottom in this case, and you can see a 100% bullish candle here, a super strong bullish long wick rejection, a lot of volume in here, this candle as well. And obviously from this, if you go into a smaller time frame, right, let me put this on playback, it will give you ideally more candles that will give you better confirmation. Now, by the way, this is not how I trade my break and retest. This is not how my edge is. My students in my mentorship know. It wouldn't be fair on them if I just showed everything. I try to. What I normally, if you watch my past few videos, I normally show my channel what normally people, more than what people even provide in some courses, to say the least. And I do that for absolutely free. We've got a bullish signal over here. But by the time you want to enter this, my advice would be enter off this one. You got your bullish reversal pattern here. Another one here as well. So you can have it, if you had it, so you got this reversal pattern over here, and you just take a buy and you can get a nice healthy stop loss. And as you can see, this is one of the reasons why I go for the bigger risk rewards, because ideally I've done my homework, collected my data, and I know how much price likes to move. And always what comes down to, even if you know your currency pair, the better that you know your currency pair is also an edge. Edge comes in different shapes and forms. The more edge you can stack up, the bigger the advantage you have over the markets. That's ideally what you want. So even example, drawing high quality zones, that's an edge, right? Because like I mentioned, the market, just think of it as two individuals. Prop firm is one person, the charts are one person, the market is the second person. If you are able to draw your zones correctly, you have an edge over the market, right? You have an advantage. If you're able to, if you just aim for a 1 to 3, but if you're able to aim for a 1 to 5 and hit those 1 to 5s consistently, you have a edge over the market. A 1 to 3 is an edge as well, but a 1 to 5 is a bigger edge. If you're able to manage your stop loss correctly, or your risk management, you have an edge over the market. Wherever, again, you have an edge over this individual. That is the whole idea behind this. This is how you want to go about it. With prop firms, again, like I mentioned, if they do everything so that they can have an edge over you. 20% commission they cut when it's not even real money. So who does that money even go to? They do profitable days, right? They want to consistently make you, risk a little bit, so you can fall into the trap of maybe you might lose, and then you might start revenge trading, and then you start going backwards, or you might even blow the account, or even start, if you're already in profit, then you might start giving your profits back to the markets. So all these little tactics, why? It's just like a casino, right? The market has, the house always wins. The house always wins, even though We might win 1 or 2 matches or 1 or 2 games, however you want to look at it, or but eventually the house always wins. And in this case, that's what is always happening. The prop firms always win, but the only thing is that as an individual, you just gotta have an edge over the market, and for and you will blow accounts. You will blow accounts. It doesn't really matter how good your edge is. If you have your own personal account, that's when your edge really, really plays out, because you got full maximum 100% drawdown. But with prop firms, unless you're obviously risking super small, and it's only worth it, I think, when you have these 200k, 100k accounts, and then you're risking like 1/4% per trade, then your edge can actually really, really play out in the long term. That's what I advise as well. But yeah, if you found value from this, like, comment, subscribe. And if you are looking for one-to-one mentorship as well, link will be in the video description. Yeah, from a 700k funded trader. Take care. I'm out.